Good evening, everybody. Hopefully, everybody's having a great day. I know that it's still beautiful weather out there for December, so I I gotta say I'm hoping we do get a little bit of snow for Christmas. I'm kind of a little bit of a traditionalist there.
Yeah, welcome everybody. Yeah, thanks for taking time out of your Wednesday. I know it's getting dark out there and things like that, but this is going to be good. You guys are going to get a lot of good information here. So we usually we start right at 7 here, but we're going to let a couple more people get in here, kind of fill us up a little bit more. But while we're waiting, just a couple things so you guys can know. The biggest thing right now is there's a lot of information on this. We try to get as much info as we can in the hour, but there's just so much that comes into this. So we will be watching the chat as we go. So if you guys have questions or anything about this or anything else, use the chat as much as you can. In fact, right now, if you guys can use the chat, utilize it. Let me know that you can see and hear us. That way we know we're good that way too. I'll start here, because this is going to be the biggest thing is you guys need questions answered. Somebody is going to be monitoring that at all time, whether it's myself or Ryan. The other thing to realize is at the end of this, we are going to stick around for a Q&A session. So whether it's more questions on this, whether it's questions on anything else, feel free to stick around at the end. We are going to stick around too. So yeah, as you guys are coming in, just utilize the chat, say hi, say things like that. Make sure you can see us all. And the other thing too is if you have to leave and come back, or if you have to leave for whatever reason, this is being recorded. So if you miss anything or want to re-elaborate on something, or you miss something, you are going to get a recording of this. It will be in an email sent out either tomorrow or Friday, depending on how it goes. And the system right now is being a bit finicky. So chances are it's going to wind up in your spam folder. So if you don't see it within a day or two and it's not in your spam folder, then just reach out to me and I'll get you the direct link to this, just so you guys can recap everything that we've been over. But we do have a good group right now. People are going to be filing in. We'll give it a couple more minutes just to let more people come in. But yeah, so again, welcome everybody. Thank you. I do appreciate it. It's going to be a good time. So lots of information. We will try to get out of here. We'll wrap this up by 8 o'clock and then start the Q&A session. I'm going to put in the chat here for everybody as well. This here is a booking link. So, as we go through this and you want to book a one-on-one call with us and kind of go over more things in detail, more personal about you, or you even want to get the process started, we do recommend you book your first call with us. That way we can set aside a time that works for everybody. And then after that, you're going to have our number. You're going to have all our contact info, and you can just get a hold of us whenever you want. But the first one, just to make sure that we're available for you, would be recommended. I'm going to put that link in a lot too. So don't worry, you guys. It'll be in the chat every now and then. So but it looks like we got a good group for now. I think we should get started here though, just because we do have a lot to cover. So yeah, again, you guys have to come in and out. Don't worry, it is going to be recorded. So we're gonna fire this up right away. So again, thanks for everybody for showing up. When you guys signed up for this, whether you seen it on as an ad somewhere or you seen it in an email, whatever, the first message you get when you sign up says that there's some things that we're going to give you as just for being here, which is entirely true. So what you're going to get right off the bat is you're going to get a free e-version of my complete guide to buying a home book. This is the book right here. I developed it over the last year or two. It's chock full of some awesome information on everything about buying a home. It'll come in like a PDF version, so you can read it on your phone, your laptops, your readers, whatever. And then also you're going to get a condensed buyer's guide that shows what Ryan and myself can do for you as well. It just kind of takes all this and condenses it into one. So that will be in the same email that the recording is in. So please check your spam folders in a day or two. If you still don't see it, let me know. Also on a side note, I do have a book as well for anybody who wants to sell their home. I know this is a first time buyers webinar, but if anybody knows anybody who's thinking about that too, reach out and I can get that copy for you as well. But anyways, we're going to get fired up into this. Lots of information. Use the chat as much as you can. We will be going through this pretty quickly. So when it comes to buying a home, it's one of the biggest expenses majority of the people make in their life, biggest investments. So we want to make sure that you're okay with everything. And if you're feeling any of these things, whether you're concerned or stressed or any of that because of what you read or hear, don't worry, it's completely normal. I bought my first house, Ryan bought his first house. We were all kind of that way. But what the thing that Ryan and I took away from all of that was me as a realtor on the realtor side of things is I learned what to do and what not to do when it comes to buying your first home and how to guide people correctly. Same with Ryan when it comes to how to handle people with their finances and mortgages. So no matter what, you are going to be in good hands. You get a lot of great information from both sides. So that being said, we're going to do some introductions so you know exactly who's talking to you, not just some random weird people. And then we're going to get into this. But first off, as mentioned, I'm Andy Goddard. I'm a realtor here in Saskatoon. I am with eXp Realty for the last few years. Helped a lot of satisfied buyers and sellers move in and out and change in lifestyle, whatever it is. It's been great. I love it. I do service majority of Saskatoon and the surrounding areas, but I am, however, licensed in all of Saskatchewan. So even if it's not in this general hub of area, I can travel further out there, but I do tend to stick close to Saskatoon simply because I live in Warman myself with my wife, my son, my daughter, and our big dog. We've been here since 2016, but I was born and raised in Saskatchewan in some small town, Maple Creek. Pretty sure most of you have never heard of it, but I've been in Saskatchewan my entire life. Have a lot of friends and family in Saskatoon, love it, and we love living here, and I want to help other people find the same joy living in this area as much as I do. So before I pass it off to my other partner in crime here, when it comes to real estate, the biggest thing is most people can't buy their own home with cash. Majority of people have to finance. And the way this team dynamic works is you have the realtor on the real estate side of things, and then you have the mortgage broker who works with the finances. We work together so well. And so that's who's on the other side. I am going to put this link in here. This is my Linktree account. It has all my social media profiles for either my businesses and my personal ones, so you know exactly who I am. So you can go ahead and click that link and it'll show you everything about me. But I am going to pass it off to Ryan, who is a fantastic mortgage broker, and I'll let him introduce himself.
Oh, thank you so much for that wonderful, warm introduction, Andy. Good evening, everybody. My name is Ryan McEwen. I work for the Mortgage Group, and Andy and I have had a great partnership for many years now. You know, it's like Andy mentioned, there's really two pieces that are the major parts of a transaction. You know, having a look and going through the real estate side, but also making sure that your financing is in place and getting your mortgage approvals and pre-approvals done quickly and efficiently, and making sure you're covered on that on the monetary side to make sure you do have that mortgage in place as we go through the process. Andy and I, you know, we talk literally every day. We go through and make sure that all the information is passed back and forth as we need to ensure that, you know, as you're going through the process, number one, you have all the information, and number two, that you know that you're in great hands, because we're talking back and forth, ensuring that all your needs are met on both sides of that coin. So, like Andy, I do live in Saskatoon and primarily serve the Saskatoon and surrounding area. But as Andy mentioned, we are both provincially licensed. So if you do have friends and family that happen to maybe live in Regina or down south, we can help them out as well. We can help them view property and go through all their financing needs as well. So if you do have yourself or friends and family that you want to refer, or you're looking at maybe moving to a different part of the province, know that you can use this for all those transactions as well. I've actually been in the mortgage industry for over 20 years now. I'm one of the elder statesmen here. I've done a lot of broker training across the province of Saskatchewan in my 20-year span. I am with the mortgage group, primarily based in the Saskatoon office here. But we do have offices all across Canada with the mortgage group, as far as our company is concerned. I've been married for 28 years now. I have two wonderful sons and two wonderful cats. So hopefully won't jump up on my computer here and say hi. But if you do, that's who those are as well. Looking forward to helping you all the way through your transactions. And if you need anything, please feel free to reach out. I will let you know as well. I will be monitoring the chat for most of the conversation tonight. So As we go along, please feel free to put any of your questions in that chat box. Don't wait till the end. Put those in there right away so that we can get them answered quickly and efficiently. Usually, what I find is that if one person has the courage to ask that question, there's 10 other people that are wondering that same question. So don't be afraid to use that chat box, ask away, and let's have a lot of fun tonight. Back to you, Andy.
Thanks for that, Ryan. Appreciate it. So yes, that's just to recap. Ryan is a mortgage broker. He's one of the best I've worked with. If anybody can help you out with financing, Ryan's a guy. Like he said, we talk almost every day. Fantastic guy. He's there for you. I'm here for you for the real estate side of things. So that's exactly who we are. Like Ryan said, use the chat as much as you can, and we're going to get rolling into this. For anybody who showed up just now, we are going to get into everything. There is a booking link. So if you want to book a one-on-one call with us to learn more about yourself with your situation, go ahead and book that call with us. We'll be able to work everything out with you. So now with all the introductions and all that stuff out of the way, we're going to get rolling into this. So I'm going to condense this down into a very short version, but honestly, when it comes to buying a home, there is a very, very huge amount of things that go into it. This will be a very condensed version. I'm going to put it down into about a minute or two, but I can honestly stick on this slide for hours just to explain everything, but we don't have that much time. So very first thing, if somebody ever comes to me and asks me, what do I do if I want to either get out of renting or buy my first home? I always say, if you can, learn everything you can about it, right? That's why we put this webinar on, is at least to give most of the info to you. We can't give all the info because there's just simply too much, and every transaction and every house deal is different than the next. But this is kind of the short version of it. So once we get that aside, I say the biggest thing to do is get a mortgage pre-approval, because without a mortgage, we can't buy a home unless you simply have all the cash for it, which majority of us don't. And the nice thing about a pre-approval, which we will be getting into right away, is that it tells you how much you can afford and what your budget is, because that's the biggest key to this when you're starting out, is knowing your budget and not looking well and above your budget, because it's very hard to go from a very expensive home back to a lower amount just because it is a starter home, right? So we want to get the expectations where they are when we start and make this a fun transaction. So once we get a pre-approval of a mortgage and know your amount, we sit down and we figure out what type of home is going to be the best for you and your family, whatever your situation is, right? Whether it's a detached house with a garage and a yard, a townhouse, or even simply a apartment style condo because you love to travel and you want a place to call home, but you also don't want to worry about the maintenance when you're gone, right? So we have to figure out what's the best for you and your lifestyle and in your budget and start looking for it. So we'll start on the MLS, see what's available for properties, and then we search each and every one of them. So the nice thing about me as a realtor, no matter who lists the property on MLS, whether it's a different real estate company or a different realtor, I get access to every single property that's on the market, and I can look at each and every one of them with, that's the nice thing about it. If, it's low inventory market, which we're seeing lately, and we're having an issue finding the right place, I do tend to look off market as well. That's a whole different scenario, which we can get into privately, but that is another option too. So there's always things to look for. But anyways, once we find you a place that you like or a few places, we go and look at them, make sure it's good for you. And if you do like it, we do submit an offer on it. We negotiate, find a price that works for everybody, and get that offer accepted. Once we have an accepted offer, we go into a condition period. Now that's about 2 weeks, where it gives, Ryan enough time to finalize the financing, gives us time to do home inspections, review the condo documents, if there are any, if you're buying a condo, or any other inspections that's needed to make sure your house is sound. If anything doesn't look good during that inspection period, you can walk away and go find something else without any issues, okay? So once we are satisfied with all the conditions, financing is good, home inspections are good, all that, what we do is we lift the conditions, and it's a firm sale. And all we do now is wait until possession date, whether it's a vacant house, owned house, rented out house. It all varies that way. So each place is different. But before you take possession of it, you do have to meet up with a lawyer, transfer the documents over, sign everything over, transfer the funds, and it's all done for you through the lawyers. And then once I get the word that keys are released on possession day, I meet you at the home. We do a very, very thorough walkthrough to make sure the house is the exact same as it was when we did the walkthrough during a home inspection. And if there are any issues, we can bring them up to the sellers. Once we're done that walkthrough, then you are on your way. You are a proud homeowner and you're on your own, and it's a good time and everybody's happy. Okay, so that, again, like I said, is a very condensed version. I could go on forever. We could go over contracts, but we simply don't have that much time. So we'll do that, you know, as a more one-on-one thing. But anyways, that is it. If anybody has any questions on the buying process, let me know in the chat. We will answer them when we can. If not, I am going to get into a very important aspect of buying a home, and that's the mortgage approval, because that's the biggest thing. I'm going to put in here again the booking link. So if anybody wants to book a call with us, feel free, go ahead. That's it right there. So the very first mistake a lot of home buyers make is either ignoring or simply not knowing about the first-time home buyer incentive program. Now, I see the chat's going good. Feel free to keep going, but I do want to ask everybody, just to keep the engagement going, has anybody ever heard of this first-time home buyer incentive program from the government? If you've heard of it, if you've not heard of it, it is fine. Just let me know. I'm just curious if anybody has heard of it before. All right, so some friends. Okay, perfect. Now, I don't know how much you guys have heard about it. There is a lot that goes into it. It's a whole thing. So we are going to break it down for everybody, so you know. But the one disclaimer, yes, it is for your very first house. Yeah. So one disclaimer for this is we do recommend, if you do not need to use this program, it's better you don't. However, that doesn't mean that if you do need to use it, it's a bad program. It's a very good program. Ryan and I have helped a lot of first-time buyers with this program. We do recommend, though, if you can do it without it, that's your best option. But I'll show you why and how this is helpful anyways, because it can work for you. So as of, well, this is from 2019, so it's a little bit outdated, but as of then, they've used about $1.25 billion worth to make home ownership more affordable for anybody buying their first home. So what is it? So this is a shared equity mortgage on the home you are buying. So when you're buying a home in Saskatchewan or in Canada, the minimum down payment required is 5% of the purchase price. I will get into some options to help you guys out with that too as well. But just for this reason, you need a 5% down payment to start. The government is going to give you an additional 5% for resale homes. They can go up to 10% on new builds, but we're just going to talk resale for now. So they're essentially going to double your down payment. All right. So there's going to be two mortgages on your house. One is your own mortgage you get from the mortgage broker, Ryan, and one's going to be a mortgage from the government of Canada. That's the shared equity one. So it has an investment in the ups and downside of your property value. So we'll get into that too. It's not interest bearing. So the money they give you doesn't accrue interest over time, and you don't have to make any payments on it. Okay. So that's the nice thing about it. And you can pay this off at any time without any payment penalties. And I'll explain why this is going to be helpful. But first, who can use this and who is eligible for it and what restrictions are with this? So anybody who's a Canadian citizen, a permanent resident, even non-permanent residents who have a work visa are allowed to apply for this. The only thing to watch out for is if you do have a work visa, you have to make sure you have at least a minimum of 183 days left owing on your visa in order to use this or apply for a mortgage. Okay. So if it's less than that, you would have to go for your PR status. Okay. But pretty much anybody can use this. So just look at your work visa if you need to know. As long as one of you is a first-time homeowner, you can use this. So if you are going in with a spouse or somebody else, if they've owned a house before, but you haven't, you can still qualify to use this. If you are going in with somebody or yourself and your income is 120,000 or more a year, you cannot qualify for this. So if you're going in with somebody like a spouse or anything like that, they will combine your incomes. And if your combined income or yours alone goes over $120,000 a year, you don't qualify for it because the government feels you make enough that you don't need their help. Also, if you do use this, and let's say just for easy math, let's say your income combined is $100,000 a year and you can use this, there is a cap of how much you can actually buy of a home, and it's 4 times your total qualified annual income max. So if you make $100,000 a year, you can't buy a property that's over 400,000. Okay, so there are restrictions to this. And also the last and final thing is the maximum down payment, including the money they give you, cannot exceed 19.9% of the purchase price. Simply because anything over 20% of a down payment becomes an uninsured mortgage, and the government's not going to allow you to get into an uninsured mortgage. They're going to keep you in an insured mortgage and pay CMHC insurance premiums, okay? So if you have 15% of a down payment, they're not going to give you 5%, they'll give you 4.9% just to keep you below that range. Okay, so that's who can qualify, and that's some of the restrictions with it. Now I'm going to go on a side note here on another program that is also available for first-time home buyers, and this is the RRSP program. So if anybody has RRSPs saved up, you are allowed to withdraw up to $35,000 of them per person and use them as a down payment. You can also use that plus this incentive together. It's not exclusive. You can use them together. They both define a first-time home buyer the same way. The only difference is within the first 2 years of using your RRSPs, you do have to start paying them back. All right, but you can make payments on them. You can put them in chunks back into your account, but you do have to start paying it back. If anybody wants to use this or think about using it, we do recommend you reach out to your RRSP provider to make sure you're okay to use it. We have had it before where somebody wanted to use it. We got an offer accepted and it turns out they couldn't use it and it crashed the deal and we had to start over again. So instead of we just want to eliminate that and just know before we start getting too far into this, okay? And if anybody has any questions on the RRSP thing, reach out to us. We'll be happy to give you more info on that. So I'm going to jump back to the incentive because that's the main part. Is how does it work and when and how can I pay it off? So there's 3 ways you can pay this off. First is when you decide to sell your home. So let's say in the 5 to 10 years of owning your home, you decide you want to sell it. When you sell your home, they take the equity out of your home or the proceeds of the sale of the home and you pay them their chunk back. And then the rest of it is yours after realtor fees and lawyer fees and things like that. But that's when you first pay them back, is when you sell the home before you either pay off your home or the mortgage is done. The second way is anytime during your mortgage period, so it's usually 25 years, you can pay them back either in one lump sum of your own savings, or you can refinance your mortgage and put it into that. The third and final way is you pay off your house totally. There's no mortgage on it anymore. You either again pay it off as a lump sum out of your savings, or you can take out a small equity loan against your house and pay them off that way. Okay, so those are the 3 ways. You cannot pay payments on it for a reason, and I'll explain right away here. So this is why you can't make payments on it, because when they give you the 5%, it's based on the value of the home when you buy it. So let's say you buy a $400,000 home, they're going to give you $20,000. When you go to pay this back, they want you to pay it back the 5% of what your current house value is at the time of paying it back. So let's say your house rises up to $500,000 in value. Instead of paying them their $20,000 back, you have to pay them the $25,000 back because that's 5%, right? So I know some people might think it's, okay, well, there's the catch, is they want more money back, which is true. They are investing in your property. However, if your house value rises $100,000, you have essentially $100,000 worth of equity in your home. You have to pay them back an additional $5,000. It's quite minimal. But even in a smaller version, let's say your house rose $25,000 in value, you would have to pay an extra $1,250. So it's not a drastic amount, but just be aware that that's how this works. You pay them off the 5% based on the value of your home. If it falls under what you paid, you would still just pay them back how much it is on your current value, right? So that's why you can't make payments, because they need to know the value of your house when you pay it off. Okay. So now we're going to get into why and how does this benefit everybody, because obviously you're going to have to pay them back more. But we're going to get into why 2 different ways that this is helpful for first-time buyers. So here's an example. When you buy a home, let's say at $400,000, you're going to give the minimum 20% or $20,000, which is 5%. With that, you will be borrowing $380,000. So that's bare minimum. The mortgage insurance premiums are at the highest because you're paying the bare minimum. But now the government's going to double your down payment, which now gives you $40,000, which allows you to borrow less from the lenders. So now your monthly payments are cheaper. And as I mentioned with insurance premiums, the more money you put down, the less those insurance premiums are, up to 20%. So if you put 10% down, it's a lot lower than at the 5% mark. If you put 15 down, it's even lower than that until you hit 20 where you don't pay them anymore. So this is where it's going to help you in the first way is giving you less monthly payments and cheaper insurance premiums. The second way is, let's say you can be qualified for $400,000, but your down payment isn't quite there enough to get you there. You can use this as well to get you more of a down payment to help boost you up to where you can be, right? So instead of giving you less monthly payments, they can boost you up to a higher value of home as long as your income and everything supports that. Okay, so that is definitely something we can talk to together one-on-one to explain the benefits of it. So I see there's a lot of questions. Keep the questions coming about it, just because there is a lot that goes into this. It is a good program. We've helped a lot of people use this program. Definitely let us know if you have any questions on that part, but that is how it is helpful. So I see, yeah, keep the questions coming. I'm going to put in here again the booking link if you want to find out more about it or book a one-on-one call with us to discuss more. But I'm going to get into the next step, which is how to get a pre-approval and what they look for. So the mistake, I call it, is not getting a pre-approval, simply because, as I mentioned earlier, without a pre-approval, you don't know how much you can afford to buy a home. We don't want people going out and look at $600,000 homes and not realizing what they can actually afford. Even as simple as a $500,000 home, and you're approved for $450,000, that $50,000 is actually quite drastic in what you can purchase of a home. So instead of getting expectations high and then finding out it's a little less, we would rather just get this figured out first so we can shop within your budget. That way we can find you the perfect house in your budget, okay? So this is how it all works out. There's 3 stages and 3 pillars of a mortgage approval. Without one, it doesn't work, and they all work together combined. So the first thing they are going to look at is your credit. For majority of lenders, they want to see a credit score of about 620 to 650 as a starting point. Anything higher is fantastic. If it's lower, then we might have to look into other mortgage programs, which could be higher interest rates and things like that. But just for this, 620 to 650 is a good starting point. They also want to know if you have any loans, outstanding debts, any payments of any sorts that have been missed, maxed out credit cards, line of credits, all that kind of stuff they're going to look at to see how you are with making payments on time. Then they want to look at your income. They obviously have to know how much do you make, how much can you afford, along with how much debt you have. So for the majority of Canadians, how it works is, unless you have a salary and we can get a letter from your employer stating what your salary is, a lot of us are going to need 2 years worth of tax returns to show that baseline. Now, I know there is probably a lot of new to Canada people that are with us today. There is a new to Canada program that Ryan is going to explain to you guys if you don't have that 2 years worth of history, and that's fine. It's definitely there to help you out. But for a lot of people, they like to look at 2 years worth of tax history. And they'll take that plus your credit to keep building on your pre-approval. Then the last and final thing is a big one, which is the down payment. As mentioned, you need 5% minimum for a down payment. And as I mentioned, there are a few ways to help you with that. So the first way to get a down payment is your own savings, which is a very, very common one. The second way is using that RRSP program I mentioned earlier. And then the other way is what we call a gift from an immediate family member. So you can get a down payment as a gift, either from grandparents, parents, brothers and sisters, right? If it starts getting a little further away from that, like aunts and uncles and cousins and things like that, it gets a little bit more hazy, but they do need to sign a letter stating it's a gift. If you choose to pay them back on your own terms, that's okay, but the lenders need to know it's a gift. If you say you're borrowing it from your parents or your family member, it just goes against you. They don't look at it as a down payment. They just look at it as more debt. Okay, so again, these are a lot of things you want to talk with Ryan about, because Ryan is great at figuring out the best solution for you and how to make it work the best. Whether we have your own down payment, use the incentive, whatever, it's super easy to figure out. Okay, so those are the 3 things that's needed. Down payment, I just want you guys to remember that even if you can be approved for $500,000 home, but your down payment is not quite there, your down payment will limit you to how much you can afford too. So just keep that in mind as well, right? So those are the 3 things that you're going to need for mortgage approval. everybody is different. Everybody has their own set of circumstances. So it's not a one size fits all thing. It is individual per person. So we can make things work. Ryan can work some fantastic magic. Even if he says we can't do it right away, Ryan's going to give you that stepping stones to get there as soon as you can, right? So we're not just going to say no, it's going to be not yet, but here's what you need to do to get there faster. And so the great thing about mortgage approval is it's underwritten. So the underwriters are going to review income, credit, and your down payment source. But again, it's reliable and it tells us that maximum qualifying amount. So we know your budget. That is a huge thing, and that's what we need to know. So yeah, that's the basis of it all. I do believe here is going to be Ryan's time to shine with this new to Canada program. So I do believe, yeah, this is going to be Ryan. So go ahead, Ryan, let him know about this one.
Well, the timing couldn't be more perfect. I'm starting to get some new to Canada questions just coming across the chat. So I just wanted to point one out. And Jonas just asked a great question. Is it true that a newcomer as a permanent resident needs to spend at least 2 years in Canada before buying their first home? My answer back was that's a great question, but that's not true at all. We can actually sometimes get our newcomer friends into homes and into mortgages as early as being here for 6 months. So this is a fantastic program. Andy and I have been doing this a long time and using this program with a lot of our friends that have come on this webinar with us. This is a program that is specifically designed with all three default mortgage insurers across the country. This is designed by the government. And the premise on the program is really to make sure that we have options for our newcomer friends coming into Canada to get into housing and get mortgages as quickly as they possibly can. So this is really for newcomers that have immigrated to Canada within the last 5 years, but do have that limited credit history. So this is a program that is for people that are fairly new to Canada. What the government kind of says is if you've been here for longer than 5 years, you likely have your PR status or even your Canadian citizenship, and you likely have well-established Canadian credit. So you don't need this program. This is really for those fairly brand new people that are coming into Canada within that last 5 year mark and do have very limited Canadian credit history. And the government realizes that. They know that you're not going to have that long-term established credit history that somebody that's been here for 20 years would have. And they realize that that doesn't necessarily mean that you're a bad risk for a mortgage. So they developed this program for those people specifically. So we can use Canadian bank statements, rental histories, utility payments, as they call it, alternative credit support. We can use, yeah, typically if you've been here for 6 months to a year, what the government asks for is that you either have 6 months worth of your primary account looked at, just to make sure that there are no issues, that your payments are all made on time, and your account is handled well. That shows us good credit history if you've been here for 6 months. They can also get things like a bank reference letter. If you go to your bank and your financial advisor at the bank says, yes, John has been with us for 6 months, and he has handled his primary account well with no issues, no concerns. The biggest thing and probably the biggest differentiator between the timelines is the government has two different down payment options underneath that new to Canada program. So you'll see kind of on point number 4, we do have down payment options as low as 5%, which is the normal typical minimum down payment here in Canada. If you've been here in Canada for that 12-month period, we can use things like a 12-month rental payment history or 12 months of a structured bill like a power bill or an SGI plate or anything with a structured payment for 12 months also shows great credit if you've been here for that 12-month span. If you are between that 6 and 12-month period, we do need that 6 months worth of bank statements, but they also do ask for 10% if you are a little newer into the country. So 6 to 12 months, typically what they ask for is that 10% down, and the credit requirements are a little bit lighter. Or if you have been here for that full 12 months, and we do have some either established credit in Canada where most of your bank accounts will give you bank accounts, visas, things like that, or alternative credit for that 12 months, then we can get you in for as low as a 5% down payment option. As Andy mentioned, we do have a couple of options that do qualify underneath the New to Canada program. Permanent residency and work permits are allowed underneath this program. So a lot of the questions that we get underneath the New to Canada program are, do I have to be a permanent resident or do I have to be a Canadian citizen? No, we can actually do Canadian citizens, of course, you fall under a normal borrower. Permanent residency, absolutely, that works great for the program, but also anybody here on a work permit. So if you are on a work permit and you are new to Canada, as long as your work permit does have at least 183 days left on it, you will qualify for the New to Canada program as well. One of the questions I did get asked earlier, what if I'm here on a study permit or a student permit? Unfortunately, those don't work under the New to Canada program. You do have to have a work permit or your permanent residency status. Now, there are a couple of banks that if you are here on a student visa, you do need a much larger down payment, typically 35%, and there are a couple of options there. But as a rule, underneath the New to Canada program, you do have to have your permanent residency or be here on a work permit to move forward. The final slide that I wanted to point out, it really kind of falls into a really nice segue as to what we've been talking about with the first-time home buyer, is this is a perfect marriage of product. You can actually use the first-time home buyer incentive together with the New to Canada program as well. They are not mutually exclusive. So if you have your own 5% down payment, you want to add on a little bit of extra down payment with the first-time home buyer incentive, absolutely you can do that. Where it also finds a really nice home, and where we've used it, Andy and I have used this a lot, is for our, those newcomer friends that are within that 6 to 12 month window. They get their 6 months bank statements or that bank reference letter to show the credit. But again, remember, you do need that 10% down payment. So what we do is we use your 5% down payment together with the 5% down payment from the first time homebuyer incentive, gives you that total of 10%, and you absolutely qualify underneath the New to Canada program. So the first time homebuyer incentive is really a great option for people that maybe only have their own 5%. They need that little bit of an extra lift. First time homebuyer incentive is a great add-on for that program as well. We do, as I mentioned, Andy and I do a lot of these. Most of the people that do come onto our webinars, there is a fairly strong New to Canada presence. So we always want to make sure that we do let you know that there are some great options to get you into housing very, very quickly. They know that you're going to have likely, fairly new employment. You're going to have fairly new credit. We have great programs that can get you in very quickly. So I just wanted to finish up my little speech here by telling you, Andy's putting that booking link in the chat as we go. Really, the information that you're going to get today is fairly broad. It's fairly wide spectrum. We want to talk to you one-on-one about your individual situations. So click that link. You'll get to talk to Andy and I, likely in different calls on a one-to-one basis, and we can really go through your individual situation and very quickly analyze how quickly you're going to qualify to get into a mortgage and get into housing. So feel free, as you guys are going along, click that booking link up in the chat box and set something up to speak to us one-on-one. All right, Andy, back to you, buddy.
Awesome. Thanks for all that info. There are a couple things I want to touch up too with this, as well as most for people that are new to Canada. When it comes to your down payment, I know a lot of people have been bringing it across from wherever you're from, whether it's India, Africa, wherever you guys come from. If you are bringing your down payment from where you are coming from, that money has to be here in full in a Canadian bank account, untouched for 90 days. Okay. So if you keep bringing more and more funds in to top it up, every time you bring that over, it resets the counter. So what we do suggest is if you are bringing money across, bring it over as quick as you can, get that 90 days countdown started, and we can help you out there. Again, also, if you are new to Canada, fresh, and you don't have quite 6 months yet, you also do need to have at least 3 months worth, or 3 months at a full-time position, okay, to use that. There could be some not restrictions, but there could be some factors that can help you out with that, with not having to wait 3 months. Again, Ryan can help you with that as well, but just be aware. you do have to have full-time employment for at least 3 months to use this to get approved, right? The other thing is we have run into this a lot lately is I didn't touch on it earlier, but I should have. I do apologize for that. Self-employment. If anybody is self-employed, no matter what, if you're new to Canada or not, if you are self-employed, you have to show 2 full calendar years of income from self-employment in order to be qualified. So if you started a job of or self-employment in the middle of last year, you do need the start of this year to the end of this year and fully next year as tax returns, a full 2 years. And now Uber is one that's classified as self-employment. DoorDash, Skip the Dishes, those types of jobs are counted as self-employment. So if you just started Uber thinking that you only need 3 months, unfortunately, that is self-employment and you would need to wait 2 full calendar years in order to use that income. Okay, so just things to think about. So again, a lot of things are individual per person, so we do need to have that kind of one-on-one conversation about it. Anyways, we got about 20 minutes to 8 here, so I kind of got to go through the rest of it fairly quickly, which is okay. We are around for Q&A after, but I'm going to start getting through this all. I have a little bit left on the financing thing, and then we'll get going. So another and last and final thing on a pre-approval is I've had people ask, well, can I get a cosigner? And a cosigner is an option if your credit isn't quite there or anything like that. You can have a family member co-sign for you. There are risks to it, obviously, like who's ever co-signing for you is taking the risk that you are making your payments. And if you don't, the lenders are going to come after your co-signer for the money. So there are risks there. They are committed to being a co-signer for you for as long as you can't be approved on your own. But once you are approved on your own, then we can go ahead and get them off the title and you on your own. There are extra costs to it, not up front, but later on when you want to get your cosigner off your title of your house. Last I checked is about $700 to $800 to do so. Not the cheapest, but it's there if you need it. Much like the first-time homebuyer incentive, this can help you if you need it. If you don't need it, I wouldn't recommend doing it. Again, with cosigners, the person who's cosigning for you has to reside in Canada. They have to have an income. Basically, they have to be approved for a mortgage as well in order to be a cosigner for you. And also, if you want to use a first-time homebuyer's incentive with them, you can. Again, you just can't exceed that $120,000 a year income with your cosigner. So that's it for the pre-approval part. And I'm going to get into the last thing. So a mistake that people make is using your bank. Bit of a disclaimer, there's nothing wrong with using your bank. Everybody uses a bank. I use RBC, but there's lots of options out there. What the mistake is using their in-house mortgage brokers, okay? The thing I want to stress the most about this whole process from start to finish is Ryan and I work for you and you alone, and right, with this whole transaction, and that we are here to make sure your money is protected and invested properly. We are in no way I'm not working for a bank to make sure they get paid. Ryan's not working for a bank to make sure the banks get their money. We're making sure you're making a sound investment and saving you as much money as we can. And that's why the biggest thing for us is this. So I'm going to do some comparisons on why using a mortgage broker like Ryan is way more beneficial than using your banks. I honestly have so far, I can write a book on all the horror stories I've had using bank mortgage brokers. It can be very messy, but here's a couple things to think about. So Ryan has access to over 30 different lenders' products. So he can go to the big banks, he can go to private lenders and find you the best interest rate and the best programs. The banks are restricted to their in-house products. So RBC has their own product, Scotiabank, TD, CIBC, all of them have their own in-house product, and that's what they're going to sell you. Ryan can shop around for you, same as I can shop around for different houses for you. Ryan works the same hours as I do, so if you have a question after normal banking hours, he can answer them for you, right? Because a lot of real estate happens after hours, evenings, weekends, when banks are closed. Ryan's not closed. He's going to help both of us out if we need him, right? Banks are going to work their normal hours. Have you ever tried getting a hold of the bank when they're closed? You're going to get the same answering machine saying, call back during business hours and we'll get back to you in 24 hours. Does not help at all when we're in a live offer situation, a multiple offer situation. We need an answer now, not in a day or two, right? Ryan's going to offer you the best mortgage rate up front. This is the mortgage rate. This is the best one. Here you go. The banks are going to offer their posted rates. And if you want lower, you may have to negotiate that lower. And a lot of people don't like doing that. That's what we're for. Ryan works, like I mentioned, for you and your best interest, not the banks, not the lenders, yours. The banks work for the banks, right? They do have your interests in mind, but in the end of the day, they do have to make sure their employer's happy as well, right? So a little bit of give and take on that one. You can call Ryan or text anytime with any questions, as long as it's, not 3 a.m, right? But we will answer you after hours, right? Banks, again, like I mentioned, are harder to get a hold of, right? So again, it's so beneficial to work with a mortgage broker, and especially for even the little things you might not think about. So I'm just going to throw a number out, a not accurate number, just for informational purposes. So let's say Ryan can get you an interest rate of, I'm just going to go 5.7, but the bank is offering you 5.8. But you've been, like I've heard lots of times, I've been with the bank forever. They're so good to us. I've heard it all, right? And they may think that, but they're not when it comes to this. And so even if they're 1 or 0.1% higher than Ryan, that could equal to, let's just say, a number like $100 a month. May not seem like a lot. Over a full year, that's $1,200. But over 10 years, we're looking at $12,000. So for me, I would rather you put that $12,000 into your pocket instead of the banks, just because of a small little amount. It may not seem like much, but it does over time. Okay. We're here to save you money. We're here to make you a sound investment, not give it to somebody else for no reason. Okay. So that's a big reason why Ryan can help you out a lot more. And if you do decide to go check what your bank's going to offer, by all means, go ahead. But I always recommend you take that number in that program and you bring it to Ryan, and he'll show you, how he can beat it, how he can make it better for you. And we're transparent as well. If we can't get you a better deal, or Ryan can't get you a better deal, we're going to flat out tell you, okay? Because again, we're here to work for you, not against you. So it doesn't hurt to get both opinions. And the other thing is bank penalties. So whether you decide to sell your house early or break your mortgage early, which, let's be honest, majority of first-time home buyers do not stay in their first home forever. A lot of them will just get into it, build that equity, and start moving up to different and better ones. We want to make sure that when you do decide to move, whether it's to move to a different city, province, country, a job increase, a job loss, whatever the reason is to move out and break that mortgage, we want to make sure that your payout penalty is minimal to none. We can't guarantee it's none, but we want to make sure it's very minimal. And banks are noted to have higher payout penalties. Okay. Ryan can also show you the option of being able to pay off more of your mortgage every year, maybe upwards from $10,000, $15,000, $20,000 a year with no penalties. Okay. So Ryan, again, will find you great programs for everybody. All right. So those are some big things. Again, I'm going to put the booking link in here. Just if anybody wants to get on the approval process or know more about it, reach out to us. Now I have about 10 minutes before 8. I'm going to get into the real estate side of things. I am going to go pretty quickly through that too, so bear with me on this, but it's not nearly as detailed as this. So mistake number 4, like I said, I don't touch much on this. This is buying directly from a builder. So if you're buying a brand new home, majority of people buying their first house don't buy a brand new home. We buy resale homes and build up to your new build, but some people do, and that's okay. What I want you to realize is buying directly from a builder does not save you money. Okay? They know that realtors sell their products all the time, so they kind of have their price based on that, and that's it. And also, when you go to a builder, they're going to sell you their product and their product alone, where I can show you different builders' products, different resale products that fit you better. And I know which builders are good. I know which ones aren't the best. I can detail what builders include, what they don't include, right? A lot of times buying a new build house, you don't have a finished basement, you don't have a backyard, you don't have a fence, you don't have air conditioner built in, you don't have appliances, so you have to add those. So if your base price is $470,000 and you keep adding things, it could be upwards to $550,000. I know right now new builders are quoting legal basement suites at about $88,000. So let's say you buy one at $500,000. Well, it's going to quickly get up to $590,000, $600,000 if you add appliances, about $8,000, and air conditioner is at $6,000, right? So we want to make sure you know exactly what's in it, what you can put into it, and go from there. Now, what, again, like I said, I want to save you money. Builders don't really budge from their purchase price, because what they said is what it is. If you negotiate purchase price of one build, it'll affect the rest of them and keep getting lower and lower and lower, like a domino effect. So they stay firm on their purchase price, but we can try and add things in, like perhaps an appliance package or an air conditioning unit, right? They can't guarantee they're going to add them to it, but if you are putting a bunch of different things into it, they are more inclined to work with you and add more things for you. So we can look at that as a builder basis. The other thing is, like I said, it doesn't cost you more or less to take me with you or go directly to a builder. But again, you're not getting that knowledge, and you're not getting somebody working for you if you go directly to the builders. You want somebody who's going to get the right house for you at the right price, okay, and the right features for it. If you want to learn more about builders and things like that, reach out. There's a ton of options out there, but just be in mind, you will have to add a lot more to it as we go. That's a good question. Better to buy a resale or new home? That's a loaded question in a sense. So stick around for the end. I'm just going to get through this, and I'll explain a little bit of the pros and cons to each of them, okay? But yeah, I'm going to move on to one of my favorite topics, and that's simply a home inspection. Now, let's keep the chat going. Does anybody know, just throw a number out there, I want to see if you guys are close, how much do you guys think a home inspection is worth for any detached home? I'm just kind of curious right now. Ooh, we got to find you a new home inspector for 800. That's a bit expensive, but yeah, I mean, good. Thanks for throwing a number out. Honestly, the more common one, I work with a few different home inspectors that are my go-to. They're about roughly the 450 range for a detached house plus GST. So I think it works out to like 470, 475. So they may think that it's kind of a higher number, but honestly, it's worth every penny. They give you they don't miss anything, well, majority of anything, right? They can only look at so much. They can't actually open up walls, but they use infrared technology. They use moisture detectors. They test every appliance, every piece of electrical, every plumbing, check the roof, check the attics, check everything, right? And it's worth it because they're going to give you a list of everything that needs maintenance or needs to be fixed. And that way it gives you a sound decision. Now, no matter what you're doing, whether you're buying a new build or a resale home, they are going to find something. Okay, so the big thing is, don't worry about that, because it's usually little maintenance items that every house comes with, right? But it's the major items that could make you want to walk away from the house, like a poor foundation or mold or termites or something like that, right? If it's little things like, well, the electrical has an issue, we can ask the sellers to fix that for us. Or we can negotiate money off the purchase price so we can fix it on our own. But the nice thing is, this is a condition built into the contract. If you're not satisfied with the home inspection, you can walk away and go find something else. I've yet to walk away from a home for a home inspection, but we usually negotiate fixes or purchase price, right? The latest one wasn't the HRV system in a condo wasn't working for my buyer. Like when we had the inspection, they said it was not working at all. We had the sellers fix it. I was there when the professional was there to fix it, and they provided us the receipt for it, and it was working and functional before they even moved in. So that worked out well. My own house, when I did an inspection on my own house, they found a leak from my upstairs bathroom was leaking into my main floor bathroom just because of missing caulking or seal on the shower upstairs. So all it took was a little bead of caulking, $5 from a hardware store, and it saved me a ton of money, because if I never got the inspection, I would never notice that until my roof literally would have, dropped with water, right? So that saved me a ton of money just knowing that. But it's always things like that. Even new builds, yes, you get home warranty, yes, but there are things that you don't physically look at unless you're actually going to poke your head up into the attic and you know what you're looking at and see something wrong. Most people don't. So it's good to still get a new build inspected as well, because you can take it to the builders and tell them to fix it because you have warranty. If you choose not to do a home inspection, which again, I don't recommend, I do get that in writing and document that you chose not to, just to cover myself, because I know that you can miss a lot of things without getting this done. So again, we're here to save you money. We're here to find you the right house, right? Not just a house. We're here to find you the right house for you. And again, it can save you upwards to tens of thousands of dollars if there's something found and you don't know about that. Okay, we have about 5 minutes. I'm going to touch on the one last thing, and then we'll get into the Q&A session and go over a lot more details if you guys are wanting. And that is the condo review document. So the difference between this and the home inspection is this is mandatory. If we go to buy a condo, anything with a condo attached to it, it's mandatory we get a copy of what's called the estoppel. That has all the information of the condo. Okay, what's not mandatory is you getting it reviewed by a lawyer who is a professional of dealing with these. I know what's in them. I just am not the professional that would explain it all to you. That's what the lawyers are for. You're already paying a lawyer to do the transaction at the end, so you might as well get them to look at it, because most don't charge you extra, or even if they do, it's like a small fee compared to what you will pay for lawyer fees to review that for you, and they'll be able to let you know the ins and outs of the condo and if it's good, and you can walk away from the deal if you find something wrong with this too. The major things to look for with this is the reserve fund. That is how much money the condo corporation has put aside in case of any major fixes. If there's not much of the reserve fund or is deficient, what could happen is if an unforeseen major fix comes up and they don't have the funds to cover it, they're going to do what's called a cash call, where they ask all the unit owners for a certain amount of money to fix it. It could be a couple $100s, could be thousands of dollars. So we need to make sure that you're covered that way, and that's not going to happen anytime soon. It'll tell you how much the condo fees are, how much of the condo fees are going to what. Make sure that's correct. Make sure they've been audited correctly. See what needs to be fixed or what has been fixed in the past, and all the bylaws. So what you can and can't do with your unit. So a lot of it is you can't change anything at the exterior, because they all have to look the same. Interior wise, usually you're okay with, but some, like apartment style condos, can restrict you on what kind of flooring you put down. So some don't let you put hardwood or laminate flooring in the main living areas because it takes away that sound barrier for the people below. So you want to watch for that in case you decide to do renovations and you find out after you weren't allowed to do that and you get caught and fined, and it's just more money that's going to cost you. Also lets you know if you can rent out the unit, if you can Airbnb it, things like that. So this is very, very important, because of the cash call is one thing, to make sure that the condo corporation is running properly, and this, again, protect you and know what you're buying as a condo. So that is a big thing. Again, it could save you up to thousands of dollars if cash calls come, or increase of condo fees, fines from not following the bylaws, things like that. So again, a lot of things here, but well, this isn't to scare anybody. This is just to show that we have a lot of things in place, that just because you put an offer and it got accepted does not mean you have to proceed to buy it, right? We have to make sure that the house is okay and it's not going to cost you a ton of money or there's major issues. One thing I do want to touch on though, is even if you get an offer accepted and you decide to walk away from it because you decided you just don't want it anymore, that's where we kind of can't do that. The sellers can take your deposit. It has to walk away because of one of the conditions, whether it's financing, the estoppel, the home inspection, things like that. So when we do write an offer, we do want you to make sure this is the place for you and you're going to be happy and satisfied with it. And that's again, Ryan and I are here to work for you to make sure the place you buy is the right place, right? Not just a house because it's a house, it's the place for you guys. Okay, so that being said, there's a lot of questions here. I know Ryan's got to a lot. My bookie link's in there. I see there's some people that have already booked a call. Pretty excited to talk with you guys about everything. But I do hope that with this whole thing, I'm pretty much a minute to spare, so I'm happy with that. But I hope that we've at least alleviated some of this for you guys. If we didn't get it all, book a call with us and let's see what we can help you more with. I do hope that this was very informative for a lot of you and that you got some good value out of it. But for now, because I've been talking for a while, you guys have heard me for a while, I'm going to let Ryan jump back in. But this is what's going to happen when you click the booking link. So you're going to click on this link here. This is going to come up. So it's going to be a calendar with available dates and times for my calendar. So you choose a day and time that works for you. It's going to plunk it right into my calendar, give me notifications that we're going to speak. And that way I'm one-on-one with you guys, figure things out. And then if we do need to get Ryan involved right away, 100% we're going to get Ryan involved and get him on things. So that's usually how it works. But yeah, but that's it for our actual presentation. We are now at 8 o'clock. Ryan and I are going to stick around for a while here and answer some questions. So I know Ryan's been kind of dealing with this, so I'm going to let him talk on some things, and I'll see if I've missed anything on my end here.
We're doing great on the question side, Andy, and thank you so much for all the great questions, guys. I mean, it really lets me know that you guys are fully engaged in what we're telling you, and that's a lot of fun. As Andy mentioned, you know, this can be a big process. Buying your first home is a huge thing, but we want to make sure that this is fun and helpful. We want to take that stress out of the situation for you. Let us deal with all the hard stuff and you just enjoy the process. We're going to help you all the way through that. I did want to comment on this is a fairly recent thing that just happened to a client of mine. And Andy mentioned the home inspection and how important that home inspection is. So a friend of mine, they had just wrote an offer on a new house. The house had a basement suite in it. They loved it. They walked through it. It was all great. They wrote the offer, got their mortgage all approved. And the last thing, a couple of days before the condition of financing date, was having that home inspection done. And the home inspector, just so you know, he goes to the dirty areas of that home. He goes to the you know, up in the attic, and he sticks his head in and around and under things, and he checks you know, the trim on your windows. He checks, you know, at the baseboards and behind the toilet and things like that. So this inspector actually went and found black mold down in the suite, in the cupboards, in down in the suite. And it turns out that the entire wall behind the cabinets was full of black mold. And thank God that inspector had gone through and done that work, because that client could have had you know, a major cleanup bill or a major health concern going forward with that home. And they did stop the transaction and found a home that worked a little better for them. So know the importance of that home inspection is there to protect you. I know some people go, oh, you know, there's a little bit of a cost there, but know the value of what that can bring back to the table when you do have that done. So just wanted to kind of throw that story in there.
Yeah,
A couple of comments
that's
here.
good.
Yeah.
Yeah.
Sorry, go ahead, Eddie.
No, I just kind of wanted to tack on to that home inspection thing. It's $450, but honestly, it's the stuff they find. Just every time I go to one, it's always something different they find, and it's pretty. And I just want to reiterate again, like I mentioned, they are going to find something all the time, no matter what. But a lot of it is usually small little things. And honestly, I had one a couple that were buying it. They were really awesome people, but they literally are not. Like a lot of people don't know how to fix their own home because they've never owned a home before. I've learned a lot off of YouTube, honestly. I fix my own home a lot now myself, but you learn that thing. But there's a lot of times where they get a book, like a home inspection of little things that are very, very, very easy fixes, like can cost you less than $10 for the whole amount. But they want to go and call contractors. And that one time I offered to bring my tool bag over, and I said, these are so little, and I've done all these in my own house. They're easy to do. You know, I can do that. Some things I can't just because of liability reasons, but little things I can help out with for sure. Just keep that in mind as well. But again, Ryan, you were on to something here.
Yeah, I was, you know, and great points there. Just because the home inspector goes through and finds stuff doesn't mean they're major things. They might be, and they might be you know, information that you know, at least you have a decision made on whether you want to proceed. But lots of these things, they're little things like, oh, we noticed maybe a drip in the tap downstairs, and you put a little washer in it, things like that. So they're going to go through and let you know everything they find out, little or big. So yeah, I mean, if it's just a washer, know that that's kind of the level of detail that they're going to go through to make sure that you have all the information that they can provide on that home. Absolutely. And
Uh,
hey, a realtor that's going to come over and do a little bit of work on your house for you, wow. I mean, what sort of a value add is that? I love it.
all right.
Andy's going to come over Caulk my bathtub.
Well, there's limitations, but yeah, I'm open for that, right? But I kind of want to touch. There was a question asked that whether it's better to buy a resale home or a new build. Now, literally, Ryan and I were talking this earlier this afternoon, and we kind of just went over the same thing with a couple that are wanting to buy their first home with us as well. And I went and showed them houses on the weekend. So we looked at one resale home that was built in 2003, I believe, and then we looked at two new builds. Now, again, they were in the idea that, wow, we want to buy a new build. We're not sure about a resale home because the one that we looked at needed a lot of work. It did, and I was honest about them. I said there's a lot of work that needs to be done with this, and it's not worth the amount. But we looked at new builds, and they just weren't sure that a new build was the way because they had to put a lot of stuff into it, right? You need to put the lawn in the back, the fences up. They had to put a basement in, and there's still a lot you need to do with a new build to make it not really livable in a sense, but finished, right? Whereas they decided, and this is what they told me today, was that, you know what, we had a good look at everything, but we kind of want to buy something that's a few years old, but finished, because that way all the kinks have been worked out and it's all done for us and we can just move in and enjoy it. And that's the biggest thing, is find out what's going to be the best for you. We can look at every option out there, and it doesn't matter if it's the first couple houses we look at or if it takes 20 houses. We want to make sure it's the right one and what fits you, but there's options out there. Now, again, with new builds, some things that people don't realize with it is it's literally bare bones when you get these things. Like, you have to put appliances in. Little things like you have to put blinds in your house because they don't come with blinds. New resale homes do, because people put blinds up and that comes with the house in the offer to purchase, right? But new builds don't come with blinds, so you have to go out and shop for new blinds. And you know, if you count all the windows in the house, right, let's say you have, well, I don't even, I'm just gonna put a number out, but let's say you have 12 windows and it's $100 a blind. Just again, that's another $1,200 you're spending just in blinds, right? So again, new builds are okay. Lots of people buy new builds, they're super nice, and you get the home warranty, but there's a lot that goes into it to make them finished, whereas resale homes are finished and ready for you, and it's good to go that way, right? So both are good options. Did we miss anything else here? Looks like Ryan's covered a lot of it. Yeah. Anything else with that, Ryan? Anything else you remember that we should touch on?
I think that covered lots of it. Yeah, great job on jumping back to that new home versus resale. That is super important. I mean, I think that realistically, the first thing out of a lot of buyers' minds is, well, I want brand new because it's brand new. You know, it's going to be perfect, it's going to be clean, it's going to be brand new, and I get this brand new beautiful thing. But when you realize that, yeah, all the things that a brand new home doesn't come with, that really you're going to have. My wife and I, we've been in, we did buy a brand new home in 2014. And since then, we've had to put in the driveway, we had to put in the front yard, all of our flower beds, we had to build a deck, we had to build a fence, we had to do all of the grass and trees. We had to finish the basement. We've been in the home for, yeah, let's see, it would be 9 years now, and we are just finishing the basement and putting casing on windows. So we've been in the home almost 10 years, and I consider myself a pretty handy guy. It's taken us 10 years to get to the point that I would call our home finished. So if you maybe aren't handy or don't have that time or don't want to wait 10 years to be able to use your basement or enjoy your backyard, resale homes are beautiful. There are some great, very nicely established neighborhoods. You don't have to worry about being in a construction zone. The first couple of years we moved in, there were literally dump trucks and graders and no paved roads going through our neighborhood because it was being, it was a brand new area being built. So there is a huge value in a resale home, even if you want something newer, like Andy mentioned. There's some great homes in that 5 to 10 year old range that are still considered very new, but have those finishing touches that you would want to enjoy right away. So don't be all automatically jumping into that brand new home if it's not something that you want. There's some great resale options out there.
Exactly. Yeah, and yeah, same like we bought a house in 2016 here in Warman and it was built in 2012. So it was 4 years old, right? Again, everything was done for us. The basement was done. And we just pretty much moved in. I had to put my own fence in, but it's minor, right? Everything else was done for me. So it all every house is going to have something for you, but a lot of buying a house is a lot of give and take too. If you are buying a resale home, there will be some give and take. So some things are going to have some things you want, some are not going to have things you want, but it's all if we're able to find you the one that has most of the stuff you want and we can add the stuff you want after, that's also a good thing too. So if we start finding everything you want in a resale home, it does get tighter to find the right one for you, especially in this low inventory market, right? It's a little bit tougher, but we have lots of ways to explain it. And so Ryan and I, like I said, we're professionals in what we do. Ryan is a professional in the finance and mortgage broking industry. I'm a professional in the real estate industry, but that means that we are connected with many professionals, whether it's like any contractors, electricians, plumbers, finish carpenters, landscapers, painters, window people. When you buy a house and we give you the keys to it and we say thanks and enjoy your house and we take off, we're never done, right? So even in 2, 3, 4, 5 years, you need to do something with your house. And you're like, well, I don't know who to call, who do people use? You call us because chances are we're connected with a professional that'll give good deals, that know what they're doing, right? We make sure to work with people that know what they're doing and refer them to people. I know some great electricians, a really good plumber that lives down the street from me. He has helped us for everything. So don't worry that if you do have to do something in the future, we have you covered that way as well. Same with Ryan. If you want advice on anything or need somebody from him, Ryan's got connections that way too. So we're never done. We never just let you go and that's it. We're always there for you. So just keep that in mind as well.
Great comment, Andy, here on we had Locke joined us a little bit late and said thank you very much for the practical info. Sorry I joined late. If you just wanted to comment on the webinar is going to come out on a rewatch link that you're going to send out to everybody. Did you want to comment on that?
Yeah, so anybody who joined late, if you didn't catch the first part of it, this is recorded. Every time I do one of these, I send the recording link along with, like I said, the free book that I'm going to send out, the buyer's guide, and the booking link will be on it all in one email. So probably by either tomorrow or Friday at the latest, I'll get that out to you guys. There is some technical issues with it, and it does end up in people's spam folders. So check your spam folders over the next 2 days. If you still don't see it by the weekend, let me know and I'll make sure to get you the link directly to rewatch this in case you missed anything. Also, another thing here, I did get a private message here is how much ROI or appreciation we can expect for investment in a home here in Saskatoon year over year, which is a really good question. For anybody who's wondering, so there is a tier system. So your top investment opportunity that's going to build you the most appreciation year over year is a single detached home, right? Especially if it has a basement suite. But those tend to gain value and equity. They build about 2 to 3% equity year over year here in Saskatchewan. Now, Saskatchewan's still one of the cheapest provinces in Canada. We do not see that influx like you see in Ontario and BC and all those big centers where it just shoots up, prices drops. Here, it's a steady increase year over year. Single detached homes are going to always bring you the more equity, 2 to 3%. Next below that would be a semi-detached home. So the one that has just that shared wall in the middle and you have no neighbors on the other side. Those ones are your second best option. They still do better, not quite as good. So I would say probably anywhere from 1.5 to 2.5%. Then you go to townhouses that are the row ones all connected to each other. Like there could be 5 to 10 all connected, right? And those ones with condo fees, those will be a little bit less. And then your last ones are going to be apartment style condos who are going to grow the least amount. Right now, they're still at the bottom where you can buy them for dirt cheap because there's so many out there. So they don't grow a lot in equity, but are able to rent them out a lot. Everybody can rent everything out right now. It's crazy that way. I do want to throw out there, I've had some people ask before, what about mobile homes? If you ever looked into mobile homes, they have that cheap price tag on them. Really don't recommend them. I had to sell one a couple of years ago and it was awful. There's so many restrictions on them. Most people don't like to lend for them. Even if you buy the trailer for like $60,000, you have to rent the lot that it's on. So you don't actually own the land, you just own the trailer, much like buying a car. And it doesn't really appreciate value. They're not built very well. And the lot fees in Saskatoon are $1,000 a month. So it's already crazy to spend that much money anyway. So we don't recommend those, but have people ask about them. So hopefully that answered your question about appreciation. 2 to 3% year over year. Obviously, if you do updates and upgrades and things like that, it shoots it up even more. Yeah, and same with Locke here. Has house price in Saskatoon been increasing year over year? Yes, they have. They have been increasing year over year. Now, how much? Like I said, 2 to 3% roughly, depends on how much you've put into it for work. The average, I have another message here. What's the average price of a single detached home and condo here? It's hard to, the average price of a single detached home, I believe the latest that came out was the average price in all of Saskatoon. 370, I believe, is now the new average in Saskatoon. In all of Saskatchewan, it's 320,000, but in Saskatoon, it's 370, 375 for a detached home. Condos, depending on the condo, there's a wide variety because there's a lot of different types of condos, but again, they would be probably around the 3 mark, a little bit less than that, because if you're going to put the apartment ones in there, then it's really going to be a lot lower in like the 200s, just because you can find condos at $60,000, or you can find condos upwards to 500 to, I've seen a couple of them penthouse ones that are over $1 million. So it all depends, right? But that's the rough range of it right now. And then you can really decrease that to each area, right? Brighton and Aspen Ridge, which are the new builds, you're anywhere from the $400,000 to $500,000 range. But then if you get the older on the east side, then you're looking more, 350 to 450, and then the west side is a whole different thing there, which is a little cheaper as well. Speaking of west side though, I know this is a big thing that's come up to a lot of people. Now, anybody who's new to Canada, anybody who's lived in Saskatoon for a long period of time, we all hear the same thing, that avoid the west side. Now, I understand where that comes from. I do understand, don't get me wrong. However, I do need to point a couple things out to people. There are some very, very nice areas in the west side, and I'm talking the far west side, like the Hamptons by the airport, very nice area. Kensington, very nice area. Montgomery, super nice area, super hard to get into because it's very exclusive. And even Dundonald is a very nice area. It's developed, it's got nice houses, and I've put lots of families in those houses, in those areas, and they love it, right? You can buy a house in the Hamptons, Kensington, Dundonald you can be anywhere from $20,000 to $40,000 cheaper for the same house you can buy in the east side. So that's just something I always want to tell people is, instead of just focusing on one end of the city, there are cheaper options in still some very nice areas. Okay, so don't always just put yourself into a small group, because then it's harder, right? Expand a little bit if you want. Not saying you have to, but if you choose to. Also, things like Warman and Martinsville, they're 15 minutes from the city. I live in Warman. I drive to the city every single day. My wife drives to the city every single day from Warman. It takes 15 minutes to get to the north end, and then another 10 minutes to get through the city. Ryan's in a Stonebridge area. I love Stonebridge area, very nice area. However, Ryan can fight me on this all he wants if he wants to, but some days I think I would rather travel from Warman to the city in rush hour traffic than trying to get from Stonebridge to the north end of the city in rush hour traffic. Now, I'll let Ryan tell me all how I'm wrong on that one if he wants to, but just options, right, guys?
I can't even argue with that, Andy. You know what? You get an accident on Circle Drive South, or it backs it up for a good hour. Andy makes a great point here, guys. Know that there are some great options all over the city. And it doesn't hurt you to go look at some of these. There are some beautiful new neighborhoods in Hampton and Kensington. Montgomery is probably one of the most sought after areas in the entire city, and it's on the west side. So go have a look. There are some great options out there. Don't say, well, because it's in a certain part of the area that I've heard I don't want to go to. That doesn't mean there aren't some beautiful homes there. There are some certain and most of the most of that talk about being on the west side is really kind of that downtown, just west of the downtown neighborhood. There are some absolutely gorgeous neighborhoods on the far west side of Saskatoon. There's some great affordable neighborhoods in kind of right off of 33rd in that Westview Dundonald area. There's some great neighborhoods out in Pacific Heights. Um, my big ask is that go see a bunch of stuff. Go have a look at a bunch of different houses. Find the one you like in that price range that fits you best. And yeah, that Warman Martinsville versus Stonebridge, it's a real thing, right? There are some great neighborhoods out, in the city here in the Stonebridge, Kensington, Montgomery, Dundonald, lots of great neighborhoods there. But don't ever be afraid to have a look at those Warman, Martinsville, Dalmeny, Dundurn, literally 10 minutes outside of the city. You're probably driving the same distance from Martinsville as I do from Stonebridge in the south end in most cases. And these are cities that are sister cities right to Saskatoon. Their neighborhoods are almost attached to the city. They have a ton of amenities and some great neighborhoods out there. So let Andy find you some great homes and open up that search.
Absolutely, yeah. So that's like I said, I've lived in Warman for a long time. Ryan's lived in Stonebridge for a long time. But yeah, it's just keep options open. I'd never have an issue showing different options just because they say, hey, what about this? Let's go look at it. Then you can tell me, all right, no, we don't want that, and that's perfectly fine. But yeah, I don't see any more questions coming up. But again, everybody, I put the booking link back in there. Book a call one-on-one with us. I do look forward to talking to everybody who has booked so far. Thank you, everybody, for the questions. If there are no more questions or nobody has any more things they'd like to know about, that's fine. We can wrap this up and get you guys back to your evening here. But if this is truly the end for this one, this is the last webinar we are doing for the year. So I do want to just wish everybody a great rest of your year. I want you to enjoy the holidays, whatever it is that you celebrate. Enjoy the new year. And I do look forward to, either working with some of you, either this year or next year. And I do wish you guys all the best and safe travels if you are traveling with family and things like that.
I'll echo those sentiments as well, Andy. It's been an absolute pleasure getting to know all of our friends through these webinars. We've helped many, many families over the years get into beautiful new homes, and we consider them friends. We want to make sure that we're always doing everything we can to help. Please have a safe and healthy and happy holiday season, and looking forward to talking to you real soon. All the best. Take care.
All right, take care, everybody. Enjoy, and look for this all in your spam folders. Hopefully it goes to your email, but if it goes in your spam folder, check that and you'll have the recording. But anyways, you guys all take care, and I hope to see you again soon. All right, take care. Bye-bye.
Have a great day.